This is For Advisors by Advisors. I'm your host, Evan J. Mayer. And today we have a very, very special guest, Mr. Anthony Ruffalo.
Great. Nice little sound effects.
The crowd is excited. Anthony is the founder and owner of Ruffalo Wealth Management. He's an independent financial advisor, and he's been affiliated with LPL since 2008. And I have you located in Fort Mill, South Carolina, but I think from watching your videos, you're like right at the LPL headquarters. Is that right?
Yeah, I'm about 30 yards from the LPL corporate headquarters.
Is that Charlotte, North Carolina?
Yeah, well, we're right it's the Charlotte metro area. It's maybe about 5 or 6 miles south of the border.
Okay.
So yeah, I mean, there's a lot of the home office employees live in Charlotte. I mean, I lived in Charlotte when I moved down here from New York, and I'm across the border now. I live in TK, which is I'm actually 3.1 miles from my doorstep. So
is Carowinds still around?
Right. Yep. Carowinds is right here.
So that was the first roller coaster I ever went on. I was, 9 to 13 years old somewhere. It was a stand-up roller coaster. And I remember like throughout the park, it had a split between North Carolina and South Carolina. Is that right?
Yeah, that's right. There's a line and the kids are like, I'm in North Carolina, I'm in South Carolina. They do that.
Yeah.
They jump back and forth.
So Anthony, I'm also going to put this into your resume because you're one of the reasons I actually went independent, and I'm going to tell you why in a minute. And you had no idea who I was, and the first time we spoke,
I still don't.
Yeah, you probably still don't. And we spoke about a year ago on something else.
I'm just kidding. I'm just kidding. I don't want people to get the wrong idea. Like, I don't think I'm anybody. I just like to mess around. That's all.
Oh, you like to have fun. And the cool thing is, so anybody that doesn't know Anthony, you're probably not on LinkedIn. He is by far the biggest influencer on there. I did interview Nick Nielsen yesterday, and I told him he was the biggest. But I think you both are top guys, and you guys bring such great content.
I'm way bigger than Nielsen.
And that's what Nick told me yesterday. So my backstory is that on how I met.
I love Nick. Nick is a good guy.
He's phenomenal. His charts he does. I told him yesterday. I think his podcast will come out tomorrow. It's a Khan Academy relived for financial advisors. So it's kind of neat.
And he's just Nick is just a better human being than me. Like, no doubt, he is just a better. Like, you could just tell he's a good person.
Yes.
He's just a way better human being than I am, and I don't have a problem admitting that.
Yeah, he is a better person. He's a better person than I am too, by far. But I remember I was making you go onto LinkedIn, and when I worked in the bank, and I think you came from AXA is where I think you started, right? And in the bank, you could only post specific things to LinkedIn, and they had to be approved, and they had to go through their compliance portal. And I remember like I would post things and it'd be like, how come I can't get any activity? And I was realizing, like, number one, LinkedIn was not going to put you in the algorithm unless you're doing something unique and fun and exciting. There's certain words and questions. When I decided to leave the bank and I was going to go to Morgan Stanley, and you go, why were you going to go to Morgan Stanley at all? And the reason is that, there was a big 7-digit check, coming my way if I did that. And at my age, that, leaving that money down on the table was a little difficult, especially when everybody was telling me to take it. But one of the things I was thinking about was social media. And during that time, I would go on LinkedIn, and you were always on there, and you were doing a video, and you were doing, these cool things. And I'm going, I would never be able to do that where I am now. Now, fast forward today, I went through the pain of not collecting the check. I've been independent now 3 years. I followed you for about 1.5 years before I ever reached out. And I finally reached out to you. I watched all your stuff. And one day you put a post out there. I don't even know if you remember this. And it was, hey, I have a lot of people connected with me. And if you're looking for juniors or any kind of advisor out there that would love to join your team, and you have a team, I'd love to hear about it. And I messaged you, and you said, call me. And I called you, and you said, what's your practice like? And I told you what my practice is like. And you ended up sending me a guy who ended up like being great. He asked for a little too much money, and he wanted to get paid as a salary employee, but he wanted the full commitment of independence and owning his own practice. And he wanted me to buy him a $20,000 a year software so that he could recruit. And it was kind of funny. But you had connected me with him. Do you remember that, by the way?
I do. I don't remember the person, but I do remember that post, and I do remember that. I honestly don't remember sending you in particular. I remember I had about a dozen. There was about a dozen guys on both sides that kind of reached out, and I was just kind of quarterbacking it and just trying to, connect the dots for people.
And that was cool. That was cool. To me, that was like, that's the stuff that, if you watch one of my episodes with Mac about, I wanted to go into the schools and really like educate kids, and I wasn't looking to get for referrals. Everybody always thinks you're looking to do, you're looking to take advantage of something. From what I've seen from you, that's not your case. Can you talk a little bit about, like, first of all, your history in the business, how you got started, where you got started? I do want to ask you about Truthful Mutual and some of the cool stuff that you're doing, which is just I have not cursed on these podcasts. I've been close to saying the F word a couple of times because I'm excited to talk to you. So
yeah, I'm trying to dial it back, keep it censored for the kids. No, but I don't know how many. I bought about 100 books from Mac. The 4 Money Bears.
Yes, the 4 Money Bears.
And I've given those away to clients. I've sent them out as gifts. I've given them to the elementary school. It's a great book. I read it. I try and indoctrinate my own children into the money process. And I actually found, this is just random since you just brought that up. I was in New York with my youngest. She's 5, and I absolutely love this book. It's I got it at the American Girl doll store randomly.
I've been there.
I've posted about this on my LinkedIn page. It's a great book it's specifically for little girls, but it deals with more of the emotional parts of money, and it gives them like little situational things on how to react when, hey, maybe a classmate doesn't have as nice a clothes as you. And it teaches them to be empathetic and realize that it's not always just about not having money. It's, we're in a pretty wealthy society now too. And when you have money, not everybody has the same amount of money. And those are also, situations where you need to talk to your kids about as well. I certainly didn't have that problem growing up. I was the broke kid, but so yeah, Mac is a great guy. So where do you want me to start? I don't want to.
What I want to know is well. So you do these videos called Truthful Mutual, and I'm guessing you had an experience of what you're going through in those videos. Can you talk about your experience like at AXA when you first got started in the business, and then kind of what made you go, independent in 2008, and what's gone on in the last 14 years?
I'm going to try and keep it to like just 2 minutes because I hate every advisor likes to talk about it. I mean, that's just what we do. So real simple. I started the business 25. I moved from New York to Charlotte. And after I went on the typical Northwestern, Mass Mutual, Merrill, I went on the typical interviews. I had a degree in finance, economics degree, and I had some experience in sales. So I was like, I want to be a financial advisor. I can sell. I want to start this career. Went on all the interviews. Everyone's like, hey, you're qualified for the job. I'm like, great. Okay, now, like, how do I work with clients? And like, well, that's the thing. Where are you going to get clients from? Like, what do you mean? Where do I get clients? Like, this is a huge building. Like, don't you have clients? What do you mean? Where do I get clients? I'm here to work. Like, so once I figured out that they were all full of shit and it was just everybody gets the job, it's all commission only, it's 1099. And yeah, there's little training stipends here and there that you can kind of find. But once I realized that it was just a financial sales job, the last interview that I went on was with Equitable, and they had this kind of specialized division of the company in the 403B markets. And I was like, I can sell, but I don't have anybody to sell to. And they were like, hey, listen, we've got an agreement. It's one of the largest school districts in the country, 17,000 employees. You have a place where you can go every day. You can wake up, and if you're creative, you can get it. You can probably get into the schools and do staff meetings, and at least you'll know who you're marketing towards.
Yeah.
And that was in 2005. There was no, like, I think we were just starting to be able to send emails at that time, but everything was pretty much over the phone. So I took the job with Equitable, and I had a lot of success kind of out of the gate because I was good at sales. I knew who to sell to. But then after about 2.5, 3 years, it was just like, when I learned what this business really was, I was like, I'm not a financial planner. I'm just a life and annuity guy. And I didn't know what life and annuity was. And again, not to demonize, because there's a place for that stuff. And I still believe in life insurance and annuities and products. I'm not one of those people that are on the complete opposite end of the spectrum, which are anti everything except for, a written plan. And I finally figured out I'm not a financial advisor. I'm not a financial planner. And I was, quite frankly, I was getting tired. I was getting burnt out. I was working 60, 70 hours a week, chasing people around because I was trying to keep up with the commissions. Everything was transactional. I'm like, is there a place that I can just have 100 households and I just manage what they have for a reoccurring fee?
Yep.
Where does that model exist? And the insurance company, now they had it at Equitable, but out of, say, 150 people in the branch, maybe 2 guys did anything like that. It was kept kind of secret, and they didn't want to really tell you about it. And there was certainly nobody to learn it from. And then my direct management, they were all about, just the annuities and insurance, because that's how production bonuses and how everything is paid out on. So a buddy of mine left and he joined some other guys that were on LPL's platform. I'd like to say I was smart enough to know what independent was. I really wasn't. I just knew I wanted to learn a better way to do the business, which was more of the wealth management, reoccurring, fee-based, being able to charge for financial plans, actually leading with financial planning, somebody to teach me what financial planning actually was, somebody to have, like, there was one guy in the AXA branch who had access to planning software. And then you would go and you'd bring them, and
Bring
it was
all the
like,
documents and yeah.
you bring them all the documents, and it's like, oh, well, here's what based on your financial plan, your client needs to buy a VUL for $800,000 and put $7,000 a month into that, and then roll this money into our annuity. And like, there's your plan. I'm like, so I wanted to learn the right way to do things. And then I joined these other guys who just happened to be on I got lucky. They subsequently left LPL, and then I went on my own after a couple of years. And then I was left on LPL's platform, and then I did my CFP, and then I really got into the financial planning, leading with financial planning and leading with strategy, and not being product focused. As I'm sure from the bank channel, it's product focused.
Yeah, in the beginning it was, and then it was kind of, how do you teach yourself? I mean, in this business, you got to know that the first person looking out for you needs to be you, and you got to go on and do it. And it's interesting, you were just talking about software, and I was thinking in my head, back even in 08, 06, 07, 08, when you were wanting to get into that, the software wasn't even quite ready yet, right? And the concept, like, I don't know if you use Money Guide Pro or what software you guys use today, but that software where you can sit with the client and make quick changes and easy changes and actually work with the client using the planning software is just such a huge advantage to what we had back then.
Oh, it's you. Yeah. And that's the evolution of the industry as well. The industry we're getting better as it becomes more advice focused and plan driven. And listen, so institutions aren't stupid. They know that they get more wallet share. When you have one advisor who's quarterbacking the entire thing, they know that they're going to have stickier assets and they're going to get more wallet share. So everybody's on the same page. It's better for everybody that way.
So Truthful Mutual, you're working with another guy on this. What's his name?
That's one of my good buddies, Keith Wilson.
Okay, so Keith's an advisor also on the LPL platform, I believe, correct?
So funny. So me and Keith, we didn't know each other until we both started posting things on LinkedIn back in 2019.
Okay.
Because
so you just started posting in 19.
Yeah, 2019. It was really like February of 2019 was my first anything. I was I was like, I'm not doing this garbage. I'm like, this is a face-to-face business. This is stupid.
Yeah.
It's old school mentality. And I went to a Gary V kind of 1-day workshop down in Miami.
I went to that. Was it with Tony Robbins was there too, and they had Robert Herjavec. Was he there?
No,
Not that one.
it was what was it called? What was the name of the thing? It was just a 1-day thing. It was outdoor and like outside.
Not Bitcoin Fest.
No. So I went to that. I was like, because I was following some of the stuff that he was doing, and I'm like, hey, I really want to go all in on this social media thing. What do I need to be doing? I just wanted to, and it just kind of popped up. So I went down there, and there was no financial advisors. It was mortgage people, real estate people, P&C guys, and even some, like attorneys and, like real estate attorneys were there. So I dove in, and that was in January. And then I came back, and then February, I was like, all right, I'm going to put my head down. I'm going to put my head down for a year, and I'm going to try and do this. And for the first couple of months, it was terrible. It was just terrible.
It actually wasn't, because I started to watch you right around then, because that's when I made the decision to start looking around. Was March, April. So it was better. Look, your stuff's a lot better now, but that stuff was motivation.
Yeah. Well, and I think this is part of, everyone says, just do it, just get going. And I think you'll see the evolution through your podcasting. Your podcast 1 won't be anywhere like podcast 50 is going to be a different finished product than podcast 1.
I can't even listen to one right now.
No, it's not. It's not you. Your guests are boring.
Yeah, there you go. Hey, Mac, you heard that? No, just joking.
No, Mac asked you. Actually, I watched his yesterday, and I forget what you asked him a question about something about technology. He's like, his answer was, "Bro,
yeah,
bro."
I
like,
love that too.
Even know? I was like, I love that. That was great. Yeah.
Well, look, I got to find a talking clip from you today. So on one of the answers, you got to use bro.
Bro.
So yeah, you started on there. You started Gary V's Gary Vaynerchuk. Anybody that doesn't know, guys, awesome. There's Tony Robbins guys and there's Gary V guys. I'm a Gary V guy. I think Anthony is too. And the stuff you're bringing out is brilliant. And then the Truthfully Mutual stuff started just this summer, right?
No, it's been a couple years. We've got 10 full episodes that we've done. And that was just I started the story. So me and Keith, he started posting some stuff on LinkedIn, and I noticed, I'm like, oh, there's this LPL guy in Greensboro, and we kind of had a little rivalry going back and forth, because Keith by trade is he is a broadcast engineer, and he has got a ton of experience in film and edit and audio and framing the shots, and he knows like backdrop lighting, key lighting, all this technical stuff. I know when I tell you I knew nothing when I first started. Zero. I was just like, but I can talk. So I just put on my camera. I'm like, all right, let me do something. So we started going back and forth, and we kind of, I forget what I think I took a shot at him on something, and then he kind of snapped back on me, and then we started going back and forth, and then we just became friends. And then I said, hey, why don't we do something together? And then we filmed something together for the LPL Roundtable, which is an internal LPL group. And then I was at Keith's office, and I go, Keith, just vamp with me for a second. And this is on YouTube. It's the very first clip. I was like, because Keith has a similar background from the insurance. Either you come from the wirehouse or you come from the insurance side of the business. So, either those are pretty much your two paths. And I said, Keith, just he didn't know what I was doing. He didn't know where I was going with it, but he was perfect because he knows the business, and he played off of it perfect. And it's the very first episode. And I said, Keith, I'm gonna do something. Just vamp with me, play with me here. And then we just shot it, and it was about about basically Northwestern Mutual.
Yep.
That's who we were talking about, and how every college kid gets the job, and how the model is broken. You just take a college kid, you put them on 100% commission. You wonder why they do the wrong thing. It doesn't make any sense. 90% of the people fail out of the business. And it was supposed to be like the wirehouse CEO talking to the insurance CEO.
Yep.
And they're like, why is our business model failing? It doesn't make any sense.
Yeah, it was brilliant, and they keep getting more brilliant. He had one where he was Matthew McConaughey in The Wolf of Wall Street. That one was funny too. So yeah, very creative, cool ideas. And you're right. When you start in this business, and it's the same thing with college in some ways. How we leave from high school, we go to college, and we all of a sudden start taking college courses, and we go, I'm not interested in any of this. I want to go live my life a little bit. And how things are kind of reversed too, because the first thing that you do is at AXA or any of these places, they say, well, you should see your friends and family first. And you go, well, so I'm going to screw over my friends and family first, and then I'll move on and get better. Because as you know, and I said this in a few of the podcasts, I say it all the time, I look at the advisor I was a year ago and I go, that guy was a real schmuck. I can be a lot better than that guy. Do you agree?
I mean, not anymore. I don't think I get any better. I mean,
no, you're there.
No, you never arrive in this, but you never arrive. There's always, I worked on a plan yesterday. I finished a plan, actually delivered it this morning to an executive, and I had to, it was 50 lines of data entry on RSUs, stock options, and grants. And at the end of that, at the end of doing that plan, that was one of the most intense plans I've done. I'm a better advisor for having gone through that comprehensive, that doing all of those, like all the data entry and then crunching the numbers and then providing the solutions and then brainstorming on, hey, well, now that we see all of the data and what it's projected out over the next 20, 25 years, paired with what you told me is very unique about your family, because he has some unique family circumstances, you should consider doing this, this, and this. And I was able to deliver that this morning. And he was like, this is great. I didn't know that things like this existed. We talked about trust planning and some of the uses, like where to utilize a irrevocable trust, how to leave some things to some other family members that he wanted to take care of in case he passed away. He talked about gifting during his lifetime. And then some other ways to accomplish what he was thinking in his head. So yeah, every day you're getting getting better in this. Well, you should be getting better. Yeah. And I don't want to knock. So with Truthful Mutual, I just want to throw this out there. There are a lot of great guys and gals at those places, at the Northwesterns, at the New York Lifes, at the Mass Mutuals, at Equitable. There's some guys that I work with that are absolutely phenomenal advisors. They really are, and they're great human beings. But what I see is they're just in too deep. They're in there for 20 years, 25 years. They're great human beings. They're awesome people. They're not doing the wrong thing. They would go independent. But at this point, the way that their compensation is, it's millions of dollars at this point. And it's just, they're in too deep. So they try their best to do to ride out the corporate culture and do the right thing within the context that they have.
And it's Anthony, I know you don't have experience in the bank channel, but it's the same thing. It actually, our channel technically doesn't exist on the independent side because bank guys don't go independent. Nick Nielsen and me are there's 3 other guys I know, but it's very, it's few and far between how that works. And yeah, you're right. They get stuck in what they're doing, and they're not bad advisors. They think they're doing the right thing, but until you make that leap and you go, I really want to expand my mindset on what I'm doing and just get better at this. It's one of the great things about being independent. No matter where you go, LPL or anywhere for that matter. With the social media, did you when you got back from the Gary V and you said you kind of the next month you said I'm going. Do you have a schedule that you kind of keep of what you're going to do for the next week?
No.
Do you do it by emotion? Like, hey, today you just had that really great experience where you delivered that plan and you're like, that's great. I want to kind of share that. And so I'm going to put that out.
Yeah. I am like the nature of water. I just flow, which is good and bad. It's good and bad. I could be much more regimented and scheduled. So I'm not. I like to just kind of do things off the top. I feel like what gives the authenticity, and that's such an abused word, but what what allows you to come across, like why social media works is if you can come across as real to the person on the other end, and they're like, oh, Evan's a real guy, Anthony's a real guy, Nick's a real guy with real challenges, real adversity, real wins, real successes, highs and lows, and you're just talking straight, and then you also incorporate in some advice here and there, people are going to go, that's a person I do or I do not want to do business with. And they get to know you. But and to me, what breeds that authenticity is being unscripted and being unplanned. And you can certainly do, like, there's nothing wrong with saying a Monday, you schedule out a month in advance of what you're going to do. It just depends on, I'm just in a different place now where I'm not trying to really grow. I'm really just trying to enjoy, not to be a buzzkill, but my wife has had a battle this year with breast cancer. And until the most important person in your life really gets sick, it's all theory, about how life changes. And it just literally, it was like, December 16th, life was normal. And then on December 17th, it was not normal anymore. It was, we had a diagnosis and it was like, holy shit, this is the new reality. And this is what we have to deal with. And it's not until it really hits close to home, other than it being you, it doesn't get any closer, or one of your kids, it really changes just your focus and on what's important and where you want to spend your time.
And I'm sorry to hear that, by the way. You've actually made a couple posts about it.
Yeah, I don't like to.
Yeah. But you did it in a very good way. And the concept of, you got to look at the brighter side of things sometimes. And that's part of your job now too, right? I mean,
well, yeah, and part of our job is we deal with, retirement, education, survivorship. The survivorship portion of the financial planning process is death and disability, right? Or if you're older, it's what we call it legacy, which is the ultimate disposition of your estate. And how do you want that to happen?
yeah.
Well, what other professions are there besides, certain doctors in the healthcare profession, and then maybe an estate attorney that talks about death and disability on a daily basis.
Yeah.
And then when it hits close to home, you're like, all right, do I really want to spend all this much? Like, how much time do I really want to spend on trying to increase my income? What is an extra $100,000 this year going to do? It's not going to do anything for me at this point.
No, and you get to a point in your practice, and it's really the reason I ended up going independent was, my book is self-sustaining also. And when you get to that point, and again, a little different than obviously a medical situation, but you get to the point where you go, my practice is growing naturally without having to put much effort in. It's a good problem to have. And that makes you be your best, because then you start focusing on things that make you better at your craft. What would be the advice you would give to younger advisors out there that are getting in the business now that, don't have, you don't want to send them to Truthful Mutual. What advice would you give them now?
It's challenging because I've got Zach as a junior, and it hasn't been the easiest task. It's been a challenging year. So I got thrown, the curveball. So I've not had as much time as I would like to have spent with him, but I've always been trying to compress his learning curve down. But listen, it is really challenging to take what up here, and you can do intuitively because you've been doing it for 15 or 20 or 25 years, and then try and teach that is a whole other art form. And it's challenging. So for the younger folks that are getting into the business, I number one, which I had Zach do, which I think was great for him, is learn taxes. And I had him do the EA, become an enrolled agent with the IRS, not so he can go prepare taxes, but to give him a solid tax foundation and how our tax code works. And at the very worst, let's say being a financial advisor doesn't work out for you, you have a means of being employable like somewhere else that's not investment related.
Great idea.
You can also, if you're at an organization, I think it's a great loss leader for you at 25 years old, 26, 27 years old, get your EA and do tax prep work. Everybody has to do their taxes. That's where you get the sense of urgency from. Everyone's got to do their taxes every single year.
Yep.
So build a kind of a tax-based business as your loss leader to get going as a 25-year-old. You get 100, you do 110 40s, in Q1, right?
Yep.
And then the other 8-9 months out of the year, you can now do proactive planning and tax planning. And then the investments come up. Hey, I notice you've got, part of what's driving your Schedule D, the capital gains, is the idiot that you have at, a Truthful Mutual put you in this mutual fund that kicked off, $48,000 in capital gains this year. Can you tell me about what was the thought process behind investing in that mutual fund?
Yeah, or have you spoke to your advisor about tax harvesting? Something as simple as that, and starting that conversation. You're 100%, and finding holes. Yeah.
So, and that's just one of 100 different examples I give you, but I would any young person to absolutely have their foundation rooted in tax because it's binary. As a 25-year-old, you're talking to a 60-year-old. You can make a tax recommendation to a 60-year-old that's binary. It is or it is not, and it can be quantified. That same 25-year-old speaking to the 60-year-old on an investment is subjective. Everybody has a way to do the investment. Everybody has a suggestion, but it can't be verified. It cannot be quantified. It's very subjective. So it is a way for the 25-year-old to immediately build a relationship and build credit with the 55 and 60-year-old, if that's the market that you want to play in. Or you have an immediate value add to your own peer group. Hey, I do taxes, and then I do planning. So I can do I charge $1,200 for the year. I'm going to do your tax return and do a basic 1-page financial plan and get you started off on the right foot. Like, who says no to that?
It's a great idea. It's one of those situations where only on an independent platform probably could you do it too. And so it's a great thing that he got started with you. Last question, and this has been great, half an hour, by the way. If anybody wants to get a hold of you, by the way, how do they get a hold of you, Anthony?
You don't.
Get a hold of me, and I will get a hold of Anthony.
I'm just kidding. I mean, I'm pretty visible. Just actually the most responsive. Well, the way that I'm the most responsive is just send me a DM on LinkedIn. It really does work.
And he does, because it's the easiest. He does respond. He does respond, which is great.
I make it a point to always, if someone takes the time to send you a message, unless it's somebody, so if there's one thing that I do now, anybody who's soliciting me out of the gate, I immediately send them a YouTube link to Truthful Mutual.
That's great.
That's my response.
We're back with Anthony, but we don't have Anthony. Somebody's new. Who's this?
I'm Ruffalo's brother-in-law.
What's your name?
I don't know. I mean, I never gave him a name. He's just the brother-in-law.
Just say Tony. I'm Tony.
He's the guy. This is the guy that you always wind up buying life insurance from. And this is the guy that lost all his FINRA licenses, but now sells fixed life insurance.
Got it. Okay. Yeah, he says he doesn't need that. He's an advisor. Now you can use that.
It's all about compounding interest. How you going to compound if you don't have a compound account?
And tax deferment, forget that it's taxable income later.
You got LERPs, you got LERPs, jerks, slurps, kerps. I don't know.
Oh, too funny. So Tony, when you went in front of the FINRA board, did you dress like this?
No, so I created this. So when you talk about marketing, right?
Yep.
My idea was, so we kind of talked a little bit, I think it was on the phone, we just talked about how like finances, I love helping people, right? We love that part of the job. However, we talk about death, disability, and these abstract risk parameters and numbers. And it is soul sucking at times. It is not fun talking about the death of people's demise and disposition of estates and taxes. It's really sometimes it really takes a toll on you. So after I was doing the social for a little while, I'm like, this, it became kind of a creative outlet. And from the creative outlet from the grind of the day-to-day numbers. So what I still do is I'll just schedule a block of time during the day or a whole day where I just want to film or kind of shoot something, and it allows my brain to just be creative and fun for the day, instead of kind of, when we talked about earlier, looking at lines of stock option grant data and what year that's going to be taxable and the most efficient way to distribute it in different planning techniques and growth rates and Excel spreadsheets. It just gets soul sucking at times.
Yeah.
So I think you're finding, you're enjoying doing this, right?
Yeah. It's funny. My usual routine was I practice transcendental meditation, and I've been doing that since 2013. And I'll probably do a podcast on that, but at some point. But that was extremely helpful in kind of calming me down and kind of getting the numbers out of my head, if that makes sense. Because Wolf of Wall Street, when you watch that movie, the part with Matthew McConaughey when he talks about all these numbers and these digits and these things cracking in your head, you leave at the end of the day, and if you've sat with 2 or 3 clients and did 2 or 3 financial plans that day, the data overload in your mind is just nuts, and you got to find a way to detach from that. And so I would do meditation in the morning before I would go in. And the way I look at meditation is that if you had a table full of paperwork all over the place, and 20 minutes later it was fully stacked, nice and neat with what was important, what was not important, what you needed to get to right away, and what could wait. That's what transcendental meditation kind of did for me. And so I would do it in the morning. I would do it right when I was done with the day. So when I got home, I was present for my kids. And what I'm noticing since I did the podcast is I was like, do I meditate before the podcast or do I meditate after the podcast? And so I've actually been doing the podcast when I get done with work. It's my last appointment of the day. And then when I get done with that, I'm actually so relaxed that it makes the meditation better. I don't know if that makes sense, but it's a cool experience.
Yeah, you're already starting in a more relaxed state, and you can go even deeper into that relaxation instead of just starting at a place where you're trying to make yourself tolerable for your family.
Yeah. And you know what that's like with that phone's on you, and you're wanting to check, and it's not good without meditation. That's helped, but you're right. The creative outlet, and it is one of the reasons, and I mentioned this earlier in the podcast, of why I went independent. I don't think you personally could never go back to a bank or wirehouse channel again, because the limitations on your ability to be creative would just be so hampered. And now that I'm doing this, and I've been doing the writing for, been doing a lot of writing in the last 3 years, since I've been doing that, it's been such a creative outlet. I don't think I can go back now either.
Yeah, no, it's you get a taste of the free, when you're independent, you talk about freedom. And it's not even necessarily the freedom of, like, you want to do all these fancy solutions for people, or you want to start selling these things that you didn't have access to in these other channels. You just want to be free to kind of just do, be you in a sense, or just express yourself how you want to express yourself without all of the censorship, the compliance, censorship.
100%. And I think, from what I'm seeing out there, LPL is kind of on the forefront too of wanting advisors to kind of get into this and be a little bit more free and be able to for a large firm to be that open to doing it, it's a great thing. I give props to them because it's funny when I look at the top influencers in financial planning online. It's a lot of LPO people, isn't it?
I think, yeah, I guess I don't really, I'm taking a quick inventory in my head. I think it would be LPL, and then it's a lot of the advice only guys or the advice only folks, because they don't have any regulation whatsoever.
Yeah.
I mean, talk about the advisor community, which I love for the young people starting out. I love that for them, and that it is advice and it's focused on giving client centric, good quality advice. But what rubs me the wrong way, and you may see me get into it every now and again with one of them, because I don't hold back on LinkedIn. This is the other thing on LinkedIn and social. I don't think everything is awesome. I don't think everybody is awesome. If I leave you a comment, it's because I genuinely like something or I genuinely don't like it, but I'm not going and leaving a ton of engagement to promote myself, because I don't care, quite frankly. Like, you take it or leave it. People that like me are going to like me. People that don't like me aren't going to like me. And I'm okay with that. I'm not trying to monetize my network to sell ironic t-shirts. So I don't care. And I don't need any more business. My organic reach, like you said, you hit that critical mass component. The advisor community, they're great for the younger people starting out. However, they have this kind of they think they have this moral and ethical high ground.
Yep.
And I completely disagree, because I think that as a financial advisor, our job is to provide comprehensive solutions. And sometimes that solution may be transactional in nature. And you can only get that person to, a fixed annuity may be the right thing for somebody, and yet happens to pay a 2% commission. But somehow that is deemed a conflict of interest by the advisors, or a lot of people for that matter. And it's easy to demonize things on social. They get so polarized, just like anything else on social media. So that's my only rub with them is the I think that you're limiting yourself when you're not doing some of the transactional things. But I also understand how the transactional things get abused. So it's hard.
It's fun, but it is interesting, because one of the things on LinkedIn that I think has come around in the last couple of years is that there are these insurance and annuity advocates actually that are now pushing back. And I what I like about it is and I do hold back a lot. I'll watch a post from you, or no, I agree with everything you say, but I'll watch a post with somebody and I'll be like, everything should be that way. And there are almost every advisor does it to some extent. They say, and I look at those and I go, do I really, if he believes that way, do I really need to argue with him on it? Because what am I going to get from it?
Yeah.
And I don't. And then there's that one morning I do, and I'm like, oh man, that was mean. And then I edit it and delete it.
I've gotten better over the last year. I used to go toe to toe for hours with people, and then I just realized it's pointless. I've been doing it for a while. I've already said what I have to say, and I have unless I just see something totally egregious where I'm like, oh no, I need to address this. I don't really care anymore.
Yeah, I like I said, I don't follow many people. I think I follow 6 people, and you're one of them. Nick's one of them. There's 4 others that I follow, and so you guys are constantly showing up in my newsfeed. But I find that stuff to be interesting and work related, and that's what I'm looking for. I'm looking for cool ideas. I think there was one of the speakers. I actually messaged her to see if she could come on the show. Her name is Kristen, and she came up with this AFO idea where like if a client's sitting in front of you and they ask like a really silly question, you just shake the 8 ball and you give it to them. Like, you know, hey, is the market going to be back up in 6 months? And you just shake the 8 ball. And it was such a cool, like quirky idea that I leave it on there. And I rarely use it, but when it comes out, it's kind of funny. So
It's interesting because I also have some unique financial planning tools. Everybody likes to say, what's the most over abused quote? Well, I don't have a crystal ball. I don't have a crystal ball. We don't have a crystal ball. Well, you know what?
you
I
have
do. I actually do have a crystal ball.
one.
I have a crystal ball, and I did a video on my crystal ball probably about 2 years ago. And I can 100% predict the future. I know what's going to happen when you don't do certain things. When you neglect certain behaviors, I know what the future looks like.
Yeah, it's a great idea. That's a great idea.
And then I also have, I keep on my desk when there's unrealistic expectations, or you know the rate of return needs to be like double digits to get the person where they want to be, or they come in assuming double digits, and you got to bring them back down to reality. We have the magic genie lamp. You just give this guy a rub, make a wish.
Gotta have fun. It's this stuff. It's the creative stuff. And you know, my boss said this once to me. He goes, Evan, you're a creative guy, but the best things are the things that are stolen. He goes, if there's another advisor doing something cool, you know, feel free to take it. You know, so Anthony, what's next for you? Like, where are you in 2 years, 5 years, 10 years? You know, I'm not one of these guys, and I actually, it was funny. I had a conversation with another advisor once. This was a few weeks ago, and he asked me to fill out one of these analysis forms, and I'm like, that's just not. I don't do analysis forms, but you know, but I know where I'm going in 2, 3, 5, 10 years, or at least where I want to go. And where are you going?
I have no idea, and I say that I stopped doing 3, 5, 10 year. I stopped doing it because they never match. They never match up. And I focus on the 1 year. Like, I would assume you're talking about from a business perspective.
No. A matter of fact, for business outlooks, I do a yearly, right? Like I do this is where I want to be in a year, and I always surpass those goals, and they end up being lowball numbers. I mean, given this market this year, you know, some of the numbers are not quite where I want them to be, but no, year over year, I do that. I mean, like, you know, for me, I'll tell you where I think I am, right? I think my clientele is at a spot where I'll grow conservatively because I can't grow much more on as it is, and I want to bring on, you know, younger advisors and kind of help mentor and get them going. Like, to me, that is the excitement pattern, and this podcast to me is an outlet to doing some of that, but it's also potentially doing that in-house. That's kind of where I see myself going, and whether the podcast works in a year or not. And I said this to my whole crew. I said, right now I sound really good on Zoom calls. I didn't sound this good on Zoom calls before I bought this equipment. So the equipment is worth it regardless. But you know, that's where I see myself. I mean more along the lines of like, what's next for you? What's the next cool, exciting thing? You know, what are your thoughts beyond you're the master of LinkedIn in a year, in a 2.5 year time, you know, what's next for you?
So I similar to you, I was last year, about 2 years ago, I was like, I want to bring on a junior, and I want to build, maybe have a couple. And then, I mean, quite frankly, and this is not an insult, Zach is a great kid. I just don't want to do it. After this year I've had personally, and then, and I realized that I kind of romanticized the idea a little bit in my head. And I just, the time commitment, I way underestimated what the amount of time and effort that I would need to put into not just one, but having multiple of these, multiple people. So and I'm the type of I try things, I adjust, and then either run with it or I drop it. So we're reformulating kind of how we do business together and still helping him. But I know now that I'm not looking for another 2 or 3 of those juniors to train and kind of groom. I don't want to like build out. I want, if I'm going to add anything to the practice, it's going to be more administrative support, more W-2 support,
Yep.
people that I can hire for. I'm just going to continue to take on a handful of new people a year, larger executive type clients. And instead of just trying to run down, new business and spend all this time marketing and doing planning, I'm just focusing on my existing client base, servicing the crap out of them, dialing in on making sure their investments I'm doing the best I possibly can on their investments, working with maybe some of their other family members and upper and lower generationally. And that's pretty much it. And then I want to hang out with my family. I want to raise my girls because they're 3 and 5. I want to spend some more time with my wife. I want to be home more. I want to spend more time with me. There's some of my personal hobbies that have been neglected, and taking care of everything for everybody. Sometimes as we advisors, we neglect ourselves. So
Is that the clothes shopping at the Adidas store?
I collect tracksuits, by the way.
It's fun.
Yeah,
I remember in college we used to have the it was the zip up and the pants, and the Italian look, like Moltisanti from The Sopranos. Had a few of those. Tracksuit.
Well, let me ask you this: What is your biggest fear in this business that could happen to your practice?
I'm afraid every day. Fortunately, I'm a perfectionist, and I want things to always go right. So, like, even when with this podcast, which now I'm going to have to edit, which now I got to figure out how to edit like this. I don't know if Andy knows how to edit this good. So we're gonna, we're gonna work through this. But like, to me, I want everything to be perfect. And so, and one thing we learn about this business, and we take home these losses in the market. We plan for the future. The clients are planned for the future. But at the end of the day, when you're managing assets, every decision you make, and we run a discretionary managed portfolio, every decision you make, means something. And so on top of the planning and everything that I do, I guess, I walk around scared all the time that, I could be doing it better, or I should be doing it better. It's a perfectionistic thought. I've seen a psychiatrist before, and the psychiatrist has said, one of the things with my issue is that I have an OCD issue with trying to always please everybody, make everybody happy. And in this business, you're not going to do that. You're not going to make everybody happy all the time.
How do you reconcile the need for certainty in your need for certainty with the uncertainty of the markets?
Well, I think you need to use protection aspects in portfolio management. I mean, if we're talking about, are you talking about specifically portfolio management?
I mean, when I take markets, stock market.
Yeah, I'm a big. Go ahead.
No, good.
I'm a big structured note guy. With yields going up, and you can get buffers and barriers of 40-45% and still get 10% coupons right now in this kind of market is, to me, that's a great risk mitigation way to utilize it. I don't think enough advisors are using them the right way. I mean, people initially, when they first came out, people were using them on commodities or on single stocks and really ultra risky type of movement. But long-term educating clients on how those work. There's softwares out there that I'm using that utilize that and can help with that. And planning's, let's be honest, planning's planning's not only the right thing to do for the client, it's the right thing to do for the advisor and how you're going to risk mitigate. You had mentioned a software called Riskalyze, which I took on 2 years ago, that you learned about at the LPL conference. And when you had said that, I was like, oh, wow, I'm so glad he found that, because to me that, and I'm there, I think they're going to be joining the show in a couple weeks. That's a software to me that like really, really helps put a number on it. What's the actual number? Oh, I'm a moderate conservative. What does that matter? When COVID comes out and the market drops by 35%, moderate conservative make it mean anything? So to me, I think the concept of risk mitigation is important in my business practice. I'm mostly fee. I'm pretty much fee only at this point. I got to do a little bit. Occasionally something might come over like a 1035 exchange where there's a need to do something. So I do it, such as a fixed annuity. But so making sure that money's processed correctly as a business owner and my payroll, I'm comfortable with the pay raises that I'm giving, things along those lines. I think there's so much that goes into this business. I enjoy every minute of it. I'm not looking forward to going home. I'm looking forward, and that's bad, right? Like I should be in that concept. But there are some days I'm more excited to like wake up in the morning and get in here at 7 and start thinking. And as I get older, those days are not as many, right? But everything scares me, Anthony.
Yeah. The reason I ask you is just so I can give you mine. So
yeah,
let me give you mine.
Yeah.
I think from a structural, the two, everything that you said is 100% accurate. I think every advisor goes through that. And there's often many, I don't even know when the last time is I had a full night's sleep and I didn't wake up thinking like, oh, did I put this cash to work? Did I do, did I check this box? Is this person, should they be a little bit more conservative? Should I, you're always questioning or second guessing yourself or whatever. I think there's not a day that goes by, and I think that comes from a good place, because we all intuitively understand that it's not money, it's time, and it's blood, sweat, tears. It's really it's deferred labor. It's what people, unused labor got stored somewhere and invested for the future when they can no longer perform labor and they need to draw on their accumulated excess. That's really what, from an economic perspective, what it is. So I get it. I understand that. And it's a big cross to bear sometimes. And sometimes I envy people in the corporate position where, they can kind of, not that there aren't stressful positions, but there are, sometimes you just feel like you're alone in your decisions.
Anthony, you hit the nail on the head. And just so you know, and you do know this, not every advisor thinks the way we do. The ones that don't, you almost look at them and say, I wish, and sometimes I didn't, right? It's one of those gives and takes in the business, but and people that are still listening to this podcast at this time are going to be people that probably still care about their business too, and think like we do. So that actually hear this part, Yeah.
Oh, go ahead. Sorry.
Yeah, I'm just saying you hit the nail on the head. The laying in bed and going, did I get that money came in today? I got to get that put to work, put it on the calendar, and make sure, I don't know how many times you load up stuff on your calendar from the time you leave your office to the time you get back in. But sometimes there might be 5 or 6 things I've added on there. Maybe you have a notepad. I don't know.
I use the notes section in my phone. But I would say that the thing that I worry about the most is the ability for us. I feel like we're one stroke of the pen, the legislative pen, away from being able to deduct our advisory fees from retirement plan, from IRAs.
They took that away from our non-IRA, so I don't know what you think they're bringing that back.
What do you mean?
Well, clients used to be able to deduct advisory fees from their taxes. They can't anymore.
No, that's not what I mean.
Oh,
I mean the actual fee billing itself. Because if you think about it for a second.
You mean to take the to take the fees from the non-qualified assets and take them all from the IRA accounts?
If you do it like that, or to
Yeah.
be able to, because if you let's say you've got $1 million IRA, you're charging a point
Yep.
at 10,000 that comes out, we get paid. There's
Yep.
no, it's not a distribution, and federal income tax and state taxes get paid on that. It's just net.
Yep.
So my biggest fear is that, one, the ability that ability goes away, and then two, the ability to even bill, because it you can see the compression on the ERISA side of the business. If they extend that to everything that formerly was ERISA, right, and they bring that over,
Yep.
well, that's going to be overnight, that could just make 50-60% of your revenue go away.
I do not have sleepless nights about that. And I don't, because I think that a management fee, if you are earning it and there's alpha in what you're doing, right? Like I always use the analogy of the steak, and, again, we live in Boca, we got some good steakhouses here. So, if you go to Outback or you go to New York Prime or Capitol Grill, yeah, you're paying more for that steak, but the alpha that you're getting is worth it. The value is there. And the IRS the legislation may make special rules like the fiduciary rule that make you really go a step and beyond. I mean, again, I worked at a bank when the fiduciary rule came out. I was not independent, and was it hell? It was hell. And the way it was determined by the bank on what we needed to do, they went extremely overboard, and they knew they did, and they lost a bunch of advisors during that time because they did that. And I think it's going to be the same thing. If anything is going to be the same. You're going to have to document a certain way. You're going to have to meet with your clients. I mean, how do you not meet with your clients quarterly or semi-annually? There's advisors that haven't met with their clients or talked to them in 3 or 4 years. That there should be a problem with collecting the management fee if you're not sitting with your clients on an ongoing basis. So I don't have that same fear, and you may be right, and maybe I should have even more fears, but I'll be on Xanax.
No, and what I mean, let me be clear. What I'm saying is the ability to even deduct a management fee from a retirement account. I mean, assuming you earn it. Like, I'm just assuming that everyone's
like the IRS is saying what we should be getting taxed on that. So yeah. No, I understand what you're saying.
That's what I'm saying.
I knew where you were going. It just the point is that what if somebody has all their money in qualified assets, and that does happen, unfortunately, sometimes. So, or a large portion. So, do they not get good advice because they can't pay for it? It's a slippery slope, or do they have to pay taxes on the money that goes out in the fee?
Yeah, no, I get it. I understand it. People at that asset level, I'm 40. I'm going to be 42 this year, and you just naturally grow, and people around your natural network. In my 40s, they've got assets now.
Yep.
We've been the beneficiary of quantitative easing for a decade, and even if you've just been doing a little bit and putting away, it's not that hard to have $500,000 in a 401k to $1 million in investments in real estate. And a lot of and that person at 40, as is still the same person they were at 30. They just happen to have $1 million now, and they're feeling the pressure of like, oh, I'm 40. The kids are getting a little older. They're going to be heading to college in maybe about 6 or 7 years now. The runway's getting shorter. My wife, maybe she's not working, or my husband's not working. Or maybe somebody somebody checks out of the workforce to start a business because they want to, they want to chase that dream down, which is awesome. And now, you're just around that.
It's you make a valid point, and it's interesting.
It's that pressure. It's the pressure.
By the way, I thought you were older than me. I happen to be older than you, but no offense, but I was watching. He's older than me.
I don't know. Are you telling me I look bad? Is that what you're saying?
No, I just figured you were older than me, but I'm older than you. When's your birthday? No, not exactly. Month.
November.
Okay, so I'm a couple months older than you. a few
Yeah.
months older than you. Yeah, but you know what the interest.
You got more gray than I do.
I got so much more regret. Well, this is when you can't, that's stressed out. That's what happens. So, and look, nobody should be more stressed than you, given your situation right now. But it's funny though that you mention our age too, because I'm a big believer that planning does not necessarily resonate with 20 to 30-year-olds. It starts to officially resonate once you hit around 40. And that's not, a guarantee. And really taking planning seriously is 50. And so, I mean, I know robo-advisors, and I've talked a lot about this at my past firm. One of our bosses was like, robo-advisors are going to take over everything. And you're going, people want to be able to speak to somebody. They want the ability to communicate. They want the ability to get advice from somebody that's not a machine that just spits out an algorithm based on 10 questions. I don't believe that risk tolerance, we talked about Riskalyze earlier, those questions are unique because it's not, how long is this money for? It's, what risk are you willing to take for what rate of return? And I think based on those kind of numbers, that's something new. I was talking earlier about the structured note software, Simon, that, that's a new software that's been out, that's just been rocking and doing amazing things. And these new softwares that are coming out on a constant basis make us better, as you had said earlier. And they don't replace us. They just make us that much stronger, because at the end of the day, it's here. It's clients know when you care.
Absolutely. Every single person on this planet, and you never talk in absolutes, but I'm going to tell you, every single person wants somebody who they can talk to about their investments, about taxes, about the proper insurance, and about how to legally structure their estate and what to do with their aging parents and the legal involved. Every single person wants one person who just knows their stuff. They can pick up the phone and say, hey, this is what's changed. What do I do? And they want to be able to trust that person is not trying to sell them a bunch of bullshit that they don't need, but just truly has their best interests at heart. That's what every single person wants. The problem is they don't know. It's a competence issue of not being trained in all those areas to give the advice competently. And then it's also, like you were alluding to, it's an issue of the heart. There are some people, I think most do a good job, but there are some people that they're just in it for the money, and they will do whatever they need to do in order to just sell the highest commission, highest fee stuff, so they can just do whatever they want. And I think that is more of the exception than the rule. And it's most certainly, I could tell you, 17 years in, it is way, way better. We're in a much, much better place now than we were 17 years ago.
100%. You couldn't have said it any better. I'm going to leave it at that note. That was great. And you were great. And it's been great meeting you. By the way, I've talked to Anthony twice on the phone, and this is our first face-to-face, and hopefully many more. I learned something about you today that was a little different, and it wasn't just the fun side. It's the side of you that I think is a more important side. So I'm glad you're in our profession. I'm glad you make our profession better. You make it more enjoyable, and you're real, and that's important. And so thanks for coming on today.
Thanks for having me, man. I appreciate it. And, I get, again, not to sound, I get asked to do podcasts, and I can usually figure out who's real and who's not. And you're definitely a real dude. You're doing it, you're in it, you're living it, you're breathing it. And, I wish you nothing but continued success and keep plugging along, and just keep elevating the industry.
It's conversations like this that make me walk away, and I just, this is what I enjoyed about doing it and the purpose of doing it. And there was not a show out there that I saw that kind of just talked about what we deal with on a day in and day out basis that wasn't put on by recruitment people or people that have, other motives. So I thought this was great, and it was just so great having you. So, guys, you know where to reach us. I think I'm going to change. I think I'm going to go like Joe Rogan and just assume that they're going to find us as Anthony did. And
all right, so you're in what, Boca?
I'm in Boca. I'm in Boca, and
I'm gonna have
anyway.
to expense a trip to Boca.
Yeah, well, maybe I'll make a trip up there. So.
No, I need to get out of here. I need a weekend. I need a weekend, man.
Well,
Let me
thanks
have it. Let me
again.
have this.
Thanks again, man. My best to you and the family. You're welcome down anytime too. When it's gonna get cold up there soon, you can make your way down.
All right, man. We keep in touch.
All right, you too, man.
See you, brother.
Thanks.